Welcome to our webinar brought to you by Automation Services, the USA distributor of Caseware Idea products. The idea of creating this webcast came from an article that we placed on our website a couple of months ago. For those of you that haven't seen it, I've got a link right here. Let me just pull that up as we get started here. So here's what the article looks like, and again, it's on automation.com, so you can go out there and get it. It makes a very nice takeaway for what we're going to be talking about on this webcast. So basically, the audit life cycle is right there in that rose-colored graphic there. There's 5 phases, and I'm going to be speaking to each of those phases throughout this webcast. So I know there's some controversy about that because it pulls into account that the auditee's management response, which is, if it's not timely, it does impact your audit life cycle. But I think more and more people understand that, and the best way to deal with that is include it in your metrics and get it right on the table. So you can see this article is kind of colorful, and it's got a lot of good information in there. So like I say, it's on the website, and you can take a look at it there. So let's go ahead and get started here on the webcast. So you can see my old boardroom, and it's empty right now. So we were a calendar year company, so by this time we had already had our big annual board meeting with the audit committee, and we were busy, where we went through our calendar of events, we went through our risk assessment, and also discussed about performance measurements. So everything is kind of empty. But one thing I did learn very, very early in my career is nothing can get you back into that boardroom faster than finding previously undetected anomalies in corporate data. So when everything seems to be going fine, all of a sudden auditors start to find things, and management wants to know what's going on. So I very early learned the value of internal audit. If you're on a regular basis sharing and informing your stakeholders of information that they did not know but need to know, your attention is going to be dragged into these situations. So let's get moving. So I like to follow events in the news, and this one, this fraud right here is kind of relevant to what we're talking about. So March 11th, which was just a little more than a month ago, a chief audit and compliance officer received an anonymous handwritten letter stating a vendor account needs investigated. Rather quickly, they learned that in March of 2001, an employee created a shell vendor mailbox and bank account. For the next 14 years, this same employee submitted and approved over 200 invoices totaling almost $10 million. So each invoice and each payment was around $50,000 each. So if you were the auditor here by now, you're probably wondering the performance, what's going to happen to your performance, how many auditors is it going to take to find. So if it was already in your event planning, you would be fine. But so let's take a look at this from the response. The pure financial auditors tend to look more historical, and so they're asking questions like, I wonder if the transactions were properly recorded and presented in the financial statements. Did we by chance look at any of these transactions during our last review? So they tend to look at things historical. Operational auditors have a more future view, and they immediately look at the vendor master file to see, one, was it even in our audit universe where we would have considered doing an audit in this area? And again, they would look to the plan to see if it was in the universe, is it on our current or future audit schedule? So the board, of course, they kind of want to know things now, want to know what controls happen. So they're kind of in the now or in the present. And you may be asking yourself as the chief auditor, when do you tell them that you've had this event? An area that's kind of starting to become more in vogue is, what do your customers of your organization think of a transaction like that? I don't know about you, but in the last year I've had 2 credit cards replaced, and I actually ended up with the crypto locker virus on my machine. And so people are starting to think, about customers are starting to become more vocal as cybersecurity and personal identifiable information is out there. And so if you, I do have some links in here, so if you want to see what my audit universe looked like, this is a real audit universe that I used. Sorry, it's kind of tiny. I'll just pop that up there. So you can see that I have it at a very high level, and it's front and back. So the first one is more the operations of the organization. The second page is more the financial area that I would look at. And I always took this into every audit committee meeting that I had. I always had that sheet, because invariably I would get the question from somebody as to whether or not that was even on our radar screen, or is it something that needs to be considered. So I was always updating this on a regular basis. Even though I was at that company for 15 years, you always learn something new every day, and of course events hit the newspaper. So I always took that with me. And there is a practice guide out there, and we're going to talk a little bit about some of the other practice guides and standards that all form a part of the International Professional Practices Framework. But this is one that's been out there since about 2009, and you can see, if I pop it up a little, maybe you can see it a little better, that there's the fraud right there, and when did the, so the event was the fraud or the theft, what the dollar magnitude, and then more importantly, when did the audit committee want to know about that event? So if it was more than 10,000, in our case it's 10 million, they would want to know about it immediately. If it involves senior management, all of them, regardless of the dollar magnitude. And so I wouldn't just pick up the phone immediately and call them, even though it says immediately. I would frame that up with discussions with the management team and indicate to them that I have an obligation to follow that up with an audit committee phone call to the chairman anyway. And of course, they were outside board members, so many of them wanted to get on a plane and come and help when we had situations like this. So there's other events on there. One that's kind of relevant to data analytics is denial of internal audit access to people or data. I had a very strong board member team made of primarily CFOs and CEOs of Fortune 100 companies, and they really wanted to make certain that audit was not being impaired in any way. So this was staple gun to the audit committee charter, and I always took that to meetings and updated it on a regular basis as well. So that's out there. So let's talk, I have a lot of references to the International Professional Practices Framework. I'm not certain if the audience is that involved, but this is the framework and the graphic that the IIA uses. So you can see, if I can get my mouse to come up, you can see the top half of the circle are mandatory guidance. The definition, the international standards, and the code of ethics. Even if in the wording it says should, it means must do. So below that are the strongly recommended guidance, and the one that I just showed you is a practice guide. So if you do not have a better document, the expectation is that you would in fact implement some of these things. So you do need to kind of keep this straight. So it's kind of a busy. So not everything is, quote, in the standards. So I'm going to, rather than keep popping in and out on the primarily the standards and the practice advisory. I have them all listed here. So 1000.A1, you can see it's pulled straight from the definition of internal auditing, and that is assurance services defined, must be defined in audit committee charter. 1000.C1 is consulting services must be defined in the audit committee charter. And that audit committee charter should be submitted regularly, probably annually, for update. Now, the other thing that's interesting here is any standards that start with the A, as in A1, those refer to assurance work, and C, as in C1 here, refers to consulting. So as you go through the standards, you'll see A's and C's, and to keep it straight, you need to know whether or not you're providing assurance work or you're doing consulting work. Standard 1300 is the Quality Assurance and Improvement Program. The CAE must develop and maintain a quality assurance, and more importantly for this presentation, improvement program that covers all aspects of the internal audit activity. 2010 references to the CAE must establish a risk-based plan and determine the priority of activity using management's framework and risk appetite levels. If none exists, the CAE is allowed to use his or her own choice. However, 2010.A1 indicates that the CAE must use a documented framework undertaken at least annually. So even if your management is not focusing, you're in a smaller or medium-sized company, they're not focusing on the risk management, it doesn't preclude the internal audit function from performing a risk assessment on the audit universe. So 2050 is an important point. Coordination between internal and external auditors to ensure coverage and minimize duplication of efforts. So here, that's, I like to ask the question, how often do auditors get together with their co-auditors from, say, the external audit firm or the insurance department, regulatory auditors, and discuss what data analytics they're doing, and I'll talk about that again in a minute. So engagement objectives. Objectives must be established for each engagement. 2210.A1 further defines that the internal audit must conduct a preliminary assessment of the risks relevant to the activity under review. Furthermore, engagement objectives must reflect the results of this assessment. So this plants the seed that in that, say, annual audit function planning sessions, that internal auditors should be starting to think about a deeper dive into the processes and even a deeper dive into the data that's being used in those processes. So let's finish these up. This one, I'll just talk in general. This 2120.A1 and .A2 basically frames up at a high level the role and responsibility of internal audit. So basically this is speaking to the requirement to maintain broad audit coverage. So if you look at this, each of these items, every audit item, positive or negative, should probably fall underneath each of these categories, and even more importantly, they may fall under several of these categories. So achievement of the organization's strategic objectives, it's a requirement for auditors to assist management in that responsibility. Reliability and integrity of financial and operational information, that indicates that audit has a responsibility to look at data, look at transactions, and make certain that any business decisions being made are being made on good data. So effectiveness and efficiency of operations and programs, safeguarding of assets, And who could forget the next one, compliance with laws, regulations, policies, procedures, and contracts. And then 2120.A2 brings in the fraud. Internal audit activity must evaluate the potential for the occurrence of fraud and how the organization manages fraud risk. Again, you saw from my audit committee matrix, I had a responsibility somewhere during the year to bring to their attention every fraud investigation that we held. Whether I was involved in it or not, management knew that I had a reporting responsibility to the board. So as you're doing your risk assessment, another category falls in, and that's how do you prioritize the audits. So the IPPF Practice Advisory 2010-1, again, I recommend you read it. I've lifted from it some of the factors that you should consider in setting the priority for your audit plan. And then the final thing is, I don't know, probably most of you have probably seen this. This is the enterprise-wide risk management. It's referred to as the FAN. And on the left side, you see that those items in kind of a darker blue are core internal audit roles in regard to ERM. The center sections are legitimate internal audit roles with safeguards. So there's some caveats that you need to understand there. And then on the right side, these are roles that internal audit should not undertake. You do not set the risk appetite. You do not impose risk management processes. You are not to be involved with management assurance on risk, taking decisions on risk responses, implementing risk responses on management's behalf, and you basically, management is accountable for the risk management program, not internal audit. So that's a lot to digest. Hopefully, if you want the slides, they'll be made available to you, and you can kind of deep dive into there. So getting back to our little fraud situation and what we can do to improve our performance, I kind of formed 5 areas that we're going to talk about here in the next 30 minutes or so. And I will finish with a demo of data analysis with IDEA. So we're actually going to look at a couple of the vendor master file tests that could have been performed rather easily. So question number 1, how to close the gap between strategy and execution. I only have a couple of slides on that, but again, timing is kind of a fortunate thing. The April 2015 PricewaterhouseCoopers State of the Internal Audit Profession study was released. And I read that study, and I like this slide a lot, talking about leveraging data to provide direction. They use a life cycle very similar to the one I use, although I connect the dots into a full circle. And you'll notice that they said 82% of the CAEs, I think there were like 1,300 responses. Obviously, I did not audit that, but 82% of chief auditors reported they use analytics in some audits for audit execution, but only 48% use analytics for making scoping decisions. The scoping decisions would be under the planning button there, the second one from the left, and 43% use analytics to complete their risk assessment, which is the top area. Now, I use slightly different wording, but convey the same thing. Honestly, I don't think this is as bad as I thought it would be. An area that kind of sticks out like a sore thumb, though, in my book, is the monitoring at the tail end. Apparently, auditors are not using it that much in issue follow-up and whether or not they believe that management has taken on more risk than what they really should be doing. So, so that's pretty interesting. And then, again, timing is everything. The Internal Audit, Institute of Internal Auditors just released GTAG 3, the second edition. So this has been revised and updated, And again, in there they have a very similar life cycle that I like. And again, in that document, they indicate 3 solid areas where follow-up should be monitored. And the document historically is flipped back and forth between auditing and monitoring, but for me, and you can look at the June 2012 Internal Auditor magazine, there is an article that I authored that talks about when management doesn't believe there's a problem, what does internal audit do? In that case, I reported to the CEO. I had a data request authorized by him. I put an evergreen clause in it that I wanted until I said stop. I wanted every quarter an account manual listing and the open invoices, and we processed those to look for credit balances on canceled accounts. Salespeople were saving those and using them as they wanted. So I see a lot of areas where technology and data analytics can be very valuable. Those of you that are doing store audits, moving data analytics across the processes can save you a lot of travel and can save you and really reduce your audit cycles. And that's an area that I excelled throughout my audit career. So, so when do you start thinking about the audit program? And I say as soon as you're in that engagement planning session, you start right there. And this is an old framework that kind of, I think, probably came out of public accounting, but it works just as well for internal auditors. And you'll notice that you have a lot of tools available, and in each of the boxes you scope out what work you're going to be doing in those areas to start building the audit program. And over the years, the data and analysis phase has been pushed in there. So oftentimes, by looking at the data analytics, you can save yourself a lot of time and probably skip some of the others. But you don't ignore all the other skill sets that you have. They all work together. So question number 2, does internal audit need a performance metric? And the practice guide, Measuring Internal Audit Effectiveness and Efficiency, basically gives us the simple answer of yes. I framed that up when we were talking about the IPPFs. So once key effectiveness and efficiency measurements and targets have been identified, a monitoring process and a method of reporting to stakeholders should be established. So the chief auditor has a responsibility to set the format, the timing, and the metrics, and you'll notice that practice guide doesn't mention timekeeping at all. So this is a slide directly pulled out of there. Again, it talks about the stakeholders, and the customer is not a stakeholder, but I think as things change, I think that sooner or later the customer is going to have a bigger say in some of these things when a company's brand is at risk. So, so here in that practice guide are a list of the additional metrics to consider. And again, I like the life cycle because it brings a lot to bear. So this is the life cycle that I used. So the annual auditing function sometimes could take a couple of months. It had to be done a couple of weeks before the February 7th or the first Friday in February to be presented to our board and audit committee. And typically that session I had an hour and a half to kind of frame up, close up the prior year and open the new year. And I did not assign basically a performance measurement on that annual audit function. I basically kept track of the cycles of engagement planning, testing, report writing, open issue. So there's some other things I like about this framework. From a QA standpoint, always had 2 key checkpoints. They're in red. We would have a thorough quality assurance done before opening the conference and before closing the conference. So before we met with the audit client to officially start testing, we went through and discussed to make certain that we had an audit program, that we were addressing the right objectives, that we knew what data we needed, and we knew what we were going to do with the data. So it's very important that you have that. And then, of course, before the closing conference, these are kind of pain points for the chief audit executive, but if you don't meet those objectives, the last thing you need to be doing is going into a closing conference and said, this is what we found, and again, if data analytics is involved, there's going to be a lot of questions. So the two yellow bullets up there, unless it was a surprise audit or a fraud, I always discuss the test plans with the audit client. Sometimes they would say, that's interesting, I didn't know you were going to look at that, but we saw that several months ago and we've made changes to our processes. So anything older than 6 months, I'd rather you leave it out of the scope. And so knowing that before you start getting into the testing is very important. Knowing what management said, and you get into the testing and see that the test results are not tracking closely with what management's perception was, that's a time to kind of pull back, get back with management and say, look, we've already done half the tests and we're not seeing improvement. Then on the back end, after the audit report is issued, I always made a point of visiting with the client to get their perception of the data analytics that internal audit used from an efficiency and effectiveness standpoint. Every once in a while they would ask that they wanted that data, they would like to do some of those analytics, but of course in many companies that's a big no-no for internal audit to use their power to feed data to the operations people. You need to make certain you're going through your internal, your information systems people and making certain that the release of data is approved by them. They're the true custodians, and auditors can get in a lot of trouble when they start pushing that stuff out. So the annual auditing function is what I'm leading up to. So how can data analytics improve performance? So let's move into that. So in that green box, there are a lot of things that can be done and need to be done that many functions don't look at. So if you have a whistleblowing hotline, many of those systems have become automated and are structured data, and you can easily pull them into IDEA and start looking for patterns and correlations and putting, as some people say, the dots together to see what else is going on in the organization. If you're doing audit client satisfaction surveys, typically those are kind of form-based. They may wrap and roll up together, or you could easily pull them into IDEA and use it to do your analysis. Officer travel and entertainment, those are the more senior level management. Typically that needs to be controlled, so that's a good activity and a good place for data analytics. The code of conduct, which may be employees, key vendors, key suppliers, key third parties, attorneys. Everybody needs to sign the code of conduct, even if it's electronically, and oftentimes they'll line through things or remove things, and so data analytics can help you get in there. So I list several of the things down there. The stock program, even if you have a phantom, which is more typical of nonprofits, those are tricky calculations and subject to review. The big feed into the annual auditing function, though, are prior year results, including, and to avoid repeat issues. And this is an area where the coordination with external audit and regulatory auditors. In my organization, internal audit had the responsibility to monitor and track till closure all the issues. So we pulled them into our issue, open issue follow-up, and followed them. And again, at the end of this annual auditing function, you need to be presenting your plan, but you should be able to also articulate to your board and audit committee what external audit and the regulatory auditors are doing that you may not be doing but have agreed not to duplicate. So there's a lot of stuff in here. Obviously, in typical planning, they tend to boil down more to training and staffing. It's a good time to look at your tools and technologies. It's required that you update the charter for submission to the board. It's a good time to consider graphical or table representations in final audit reports. Saving that for each engagement can waste a lot of time. Getting it up, first, and then the audit universe. And oftentimes in these processes, we would identify issues that needed to be submitted to management immediately. I widely used management letters. Oftentimes they were a half page for the issue and a half page for the management response. When we actually did the audit, we would make reference that we did issue that management letter and probably provide an update as to where the issue stands. So again, lots of areas for analytics. Again, in that planning process, this should have been in the green box as well. That's where you're going to do the risk-based audit plan. So I'm not, in 50 minutes I can't really walk you through in detail a risk-based audit planning process, but here is a practice guide out there to determine and update the audit universe, identify events that raise risk and opportunities, score events of probability and impact, and I have an asterisk after management actions to mitigate the risk. So you're not necessarily focusing on inherent risk, you're looking at mitigated risk or the residual risk after controls have been implemented. We talked about the priority factors. There's a IPPF on that. And again, even if management does not maintain a risk register, which could be automated or a spreadsheet, or there's many packages out there, audit still must go through this process. So there's a lot of talk about top-down, which I think fits better to management. I personally preferred bottom-up. To me, risk scoring at level 4 and even 3 and 2 was too vague. I like to look at things more at a process level. You saw my audit universe. If you studied it, you will notice that those are individual processes within those functions. And of course, that's the perfect opportunity to look at data. So let's talk real quickly on, I was able to find a reference to a risk ranking profile for vendor, or the vendor master file. And I found this in a Deloitte paper. I like it a lot, and it shows the example of where your risk ranking really needs to move. So you can see that it's got the red, yellow, green. Most people prefer 4 levels, but 3 will certainly get you there. But look at the level of detail, the spend amount, the type of spend, the contract complexity. So this is where I think it's all heading, that you either know the business inside and out or you don't. And of course they have a, heaven forbid, spreadsheet, but there's a spreadsheet that with drop downs that allows you to color in the boxes and build that map with the risk assessment. So down to more of a traditional, I've seen these standard reports that do this, where you're basically just collecting the amount of invoices. There's nothing wrong with this. Also, you would compare that to prior years to see what vendors that used to be in the top 10 are no longer in the top 10, and which ones that you've never heard of have moved into the top 10. At the insurance company I work for, we did this for the top 100 vendors every year, and so I put together kind of the best solutions is when you're starting to look at data, especially in that top phase, the annual audit planning phase, you need to be creative, and it takes more creative minds in the room to look for duplicate testing on different combination of fields. Some of the most interesting things is when you take two tables out of an ERP system that typically don't reside together, and you start to merge and pull them together, and you come to different conclusions when you see more information. In the case it's written up in the 2012 Internal Auditor magazine, typically you did not see the status of the account. That's why you needed the account manual, but you could always get the open invoices file, but it would not tell you that the account was canceled or terminated. So that's always interesting. I have 16 tests here that I pulled together to kind of frame up what you could be doing in your annual assessment planning meeting. So certainly scope analysis of the top vendors. Again, looking for vendors in the top replaced without good reason. In fact, one year we terminated our purchasing manager when we found out that he had changed up a long-term relationship. But so those things happen, and you wouldn't know about it if you weren't looking. So if anything else, data analytics allows you to look when people don't think you are looking. So we went through the risk assessment, idea. Obviously, you could modify that to fit what you want. Always, a vendor setup walkthrough to kind of see what's happening. In this case, the fraud case, you need a process for revalidating the approved vendor list. Every so often, somebody should be taking a look at those vendors and challenging whether or not they are false vendors or shell vendors. If those of you that follow the ACFE report to the nation, you find that typically the easiest way to get payments out of your accounts payable is by gaining control of an existing vendor. It may be a legitimate name, but the mailing address is one that the fraudster controls. In this case, it was a shell vendor. That vendor did not even exist. So there's lots of things there to think about. They're listed in here, and in a minute we're going to do a couple of these. So I should put a plug in for our audit solutions. We have 183 tests ready to run. They're not free, but they're not expensive. And these would be ready to run in your annual planning. You could divvy them up. Once you have the data from your company, the tests are very quick and run very fast. You could do several sets a day. You may even be able to do all of them in one day. And look at the information you would have to go back and say, which of these files are the most important and are begging for attention. Another plug, AuditNet, premium content is available for all supported IDEA users. Jim Kaplan has maintained this website for about 20 years. It's got 200,000 global users. It's got a lot of internal control questionnaires, templates, good surveys and articles, and you can go in there and you can search, and you can actually export it as a CSV, the table of contents, and import that into IDEA, and you can do an even deeper search for things that you're looking for. So right now I want to do a demonstration, so I'm going to open up IDEA, and I'm going to take you through kind of setting up a project, storing client data, reconciling the data, and then I'm going to look for the top 5 vendors test, and then I'm going to find all payments sent to a PO box. So I'm kind of following the fraud. If you have questions, I'm not really looking at the questions, but if you have questions, go ahead and send those in. So I think, if I work quickly, I can get this done in 10 minutes, I think. So let's open up IDEA. And when you first load IDEA, you notice that all the sample data comes up and everything. So the first thing I need to do is create a managed project, because I'm going to let it reside here on my I'm going to let it reside on my hard drive. If I was using a jump drive or a network drive, I would put it under the external, but I'm doing internal. So I've set it up, and I now have a library where with source files where I can add the data that the client has provided. So I need to go find that. It's sitting in a folder on my desktop under Documents. So here is an Excel file that I'm going to open, and I haven't imported it. All I've done now is stored it. You can see it right there. You can see a lot of information about that file, by dragging and dropping. So let's import that, because obviously I can't do anything until I have it in. So I'm going to use one of the wizards for the Excel. I'm going to bring that file in. You notice that there's a lot of other data formats that just about any format that you would encounter. Idea's got a wizard to help you, including PDFs. So there's the database set up. You can see the first row has got my field names, so I want to check this and move them up. And then I almost always force a 0 in blank or empty numeric cells in case I want to do any type of analysis. I don't want errors popping up all over the place. So let's hit OK, and we now have it. The first thing I typically do is, I can maximize my real estate here, so I can see a lot of what's going on in there. This obviously is a pretty big file. I hover over, I pin it. So I'm not certain what the proficiency level of people with, on the webcast. So that's the first thing I do, is get it set up. The second thing I do is I want to double check to make certain that the database administrator gave me all the fields that I was looking for. So I pull up the record layout, which is called the field manipulation, and there you can see the fields. If I wanted to change them, I just double click on it and I can change the name right there. If I don't like what it came in as, I can change that right very quickly. So I don't want to change anything. It's all fine. And then the last thing I do is I want to reconcile that back to the client records, because I certainly don't want to start doing a lot of audit work. So here is the field statistics. It's referred to as the built-in data mining of ideas. So you can see here there's 3 views, numeric. So every numeric field is being pulled over, and a lot of information automatically calculated for you. If you only wanted to focus on one screen or one field, you just unclick everything and click the one you want. You can drill down, so it says there's 11 negative records. You can pull them up, save them. You cannot extract the records from the parent file. They'll always remain there. It knows that you don't want to corrupt anything, so I can whisk across this keyboard and nothing changes. So again, with the built-in data mining, any date fields, it automatically starts calculating the most common day, common month, how many in the 12 months, and then it does the 7 days. So here's 117 records on Sunday. You may want to save that and do some drill down on Sunday records. And then we have the time field. I need to expand that a little so you can see it. You can change the before and after time field through the options, but again you can see that here's records before 6 a.m. That may be unusual, that may be fine, or maybe you need to go in there and change it to 4 p.m. So there's the drill down, and I feel very comfortable with everything I have, so I'm going to pop back to data, and now we're going to start doing some tests. So the first test I said we're going to do was pull out the top 5 vendors. So I've got a paid register here, and so I need to do some analysis, and I'm going to do a summarization on the vendor name, and I'm going to total by invoice amount, and I'm going to give that a sum by vendor name so that when it shows up on my left side, I can distinguish it from all the other files that I have. And it's not going to give me very many fields, and so in this particular fraud case, we're interested in, vendors that have a PO box. So I'm going to add all this extra data in there. So everything's set up. You can see I can get a lot of information, sum, maximum, min, average. For this test, I just need the sum, so we'll just stick to that. So now I've got a total in here, invoice amount sum, and because IDEA knows you don't want to corrupt the file, I don't have to protect this file to index on one field. I can just come over here and click the direction up and down, and so there's my top 5 vendors right there. If I wanted to do the top records analysis, under analysis you've got it. There's a help button there that shows you, walks you through how to use it, gives you examples. So there's a lot of things you can do with the top records. So in this case, I want the top 5. I want to pull them based on that invoice amount sum, and I can give it a different name or just build on the one that's there and hit OK. So there's my 5 vendors right there, and probably we want to know how long we've been doing business with them. So if I wanted to turn this into electronic work paper real quickly, I would pull up my field manipulation. I would append a tick mark and set the data type to multi-state, give it a starting value, and then I want to put a comment field in there so that the auditors can record what's going on. I'm going to give it a length of 100 characters. That's more than enough. So I need to set the starting, and for a comment, the start is the double quotes. I can pre-fill in there if I wanted to. So let's hit OK. And so now notice that I've turned it into an electronic work paper. If I didn't want to see a lot of this stuff, I could just quickly hide the fields. But as I do the tests, I have 3 choices. The first one, the attribute passed without exception. The second test is it failed. If I can't do the test because we're missing documents, I can just type in there. Now, you can't type into any other fields, only these editable fields for the auditor. So missing key doc. So that's kind of how it works. We can go back to the parent file and finish the test. Look for vendors which have a PO box. So I'm back to the original. It's all intact. And so to pull out the PO boxes, I need to append a new field. The new field is new address. And I'll make that a virtual character. And I need to put a formula in there. So the new address is going to be at strip. So I want to get all the spaces and non-character fields. I'm going to make it uppercase. And then I'm going to change the existing field name. And close that up. check the syntax, passes, push it across the file. So I have a new, got to set a field name, push it across the file. So I now have a new field over here that is that address field, and you can see that I do have some P.O. boxes in there. So now I want to pull out the P.O. boxes, and so again, let's insert a new field, append, P.O. box, put the formula in. I'm going to use the ISINI is any field, and I'm going to look on P.O. box. In that new address field. So pull that up, close it, check the syntax, passes, push it across. So hit OK, and so now I can easily see that anything with a 1 over here, it means yes, so I can index these. So there's all the P.O. boxes, and we could do probably a sampling of them, or in fact give it to the client and say, we want to check everyone if you have a policy that says you should not be sending payments to P.O. boxes. So those are the two tests that I wanted to show you. To make it repeatable, I'm just going to do this real quick. I pull up the project overview, which is a graphical display audit trail. I pull up the script creator. I pick the test that I want to repeat. I hit finish. It tells me when I close that it's going to create the script. So I'll file that, save it as a source file. Just call it vendor master file. Hit save. So there's the script. It's saved, so I can get rid of all of these files, all the work that we did. I can delete it all. So everything is gone now. So we're basically pretending it's a new period, and now we want to pull up the macro that we saved. We want to run it and hit open. Okay, so there it's running it again.
Time for our webcast. I know some of you still have some questions, but I will make sure that we follow up with you via email. And is there anything else, Don?
No, I'm good. Thanks for attending.
Thank you for attending. We will follow up with slides hopefully by Friday. Have a nice day.
Thanks.